Hey everybody, welcome back to another episode of Rehash, a Web3 podcast. I'm your host, Diana Chen, and today we're speaking with Brittany Laughlin, Chairperson at Stacks Foundation, about all things building on Bitcoin. When Brittany was originally nominated by previous guest Irina Marinescu to come on Rehash last season, I was really excited about the opportunity to potentially speak with her because we've never had a builder or operator from the Bitcoin ecosystem on Rehash in the past. And I was really interested to learn more about what's going on in the Bitcoin ecosystem ever since it became more feasible to do more with Bitcoin than simply use it as a store of value. My conversation with Brittany today did not disappoint. She walked me through the past few years of how building became more feasible on Bitcoin and what's currently happening in the Bitcoin developer ecosystem, as well as where she sees some gaps that she hopes will be filled moving forward with still some lack of education and excitement for developers to build on Bitcoin. Not only does Brittany have a really deep insider perspective on the Bitcoin ecosystem, but her years of experience investing in crypto and in the general tech space before joining Stacks Foundation and her experience as an entrepreneur prior to that, I think really help her to have a clear and as unbiased as possible view of the space. She is not a Bitcoin maxi by any means, and she participates actively in other ecosystems like Ethereum and Solana as well. So I really do trust and value her perspectives. Brittany was nominated by Irina Marinescu and voted onto the podcast by JB Rubinovitz, Triumph, Amanda Tuminelli, Karsten, Meg Lister, Andy Boyan, Bethany Crystal, Rachel Amy, Ernest Coe, and myself, Diana Chen. So without further ado, here is my conversation with Brittany. Brittany Laughlin, I'm so excited. We finally got you on Rehash. This was a few seasons coming and we finally made it happen. So welcome to Rehash. I'm so excited to speak with you.
Thank you for having me on. I'm very excited to be here. So thanks for making this possible and for all the people who voted.
This is a very special episode for me, as we were talking about earlier before we started recording. This is a first in Rehash history in the sense that you're the first person building in the Bitcoin ecosystem that we've ever had on the podcast. Most of our listeners and guests are pretty deep in the Ethereum ecosystem or working on EVM related projects. And so this is super exciting because for myself, I'm excited to be more educated on what's happening in the Bitcoin ecosystem and what builders are actually doing. I know people like to kind of give Bitcoin grief for, not having any builders or not building any cool apps or anything. And obviously, Bitcoin is, has other benefits like being digital gold, essentially being an awesome store of value. But outside of that, there is a lot happening in Bitcoin. And so I'm really excited to learn for myself and also for listeners to also learn about what's going on there.
Yeah. Well, I think it's nothing but love for the Ethereum community. I go back in crypto days, about a decade ago, made a seed investment in Coinbase when I was at Union Square Ventures. At the time, we just called it Bitcoin tech because there wasn't really a much else on the scene. That was kind of the rise of Ethereum at that time as well. So I've been in the space for a very long time. I've used all of the major chains. I've been a part of many of the great Ethereum community events. I'm going to Denver. So nothing but love for Ethereum. But we have to acknowledge that Bitcoin, is still the largest by market cap in the game. It's 5x the market cap of ETH. It really has not been able to It really hasn't competed on Ethereum in terms of programmability. It wasn't until we saw this Bitcoin renaissance in 2023 where some upgrades made it possible to do more with Bitcoin. And that you saw the emergence of ordinals. You saw basically things on Bitcoin were replicating what we already saw were popular on ETH. So you saw NFTs. We're now seeing the rise of DeFi on Bitcoin. So there is a lot of excitement on this in this space. But for people who've been in Ethereum for a long time, they might be saying, so what? We already have these things. But I think Bitcoin kind of creates a brand new landscape to be able to experiment with these ideas because Bitcoin is distinct and unique. And it does sort of serve as such a large store of value today.
It's been exciting following how the narratives changed in the Bitcoin space over time as well. And back in 2023, like you were saying, when it first became possible to start building things on Bitcoin, it was kind of this meme or this joke Bitcoin, Bitcoin NFTs, what is that? Or even, with Lightning, Bitcoin L2, haha, what is that? But now it is a really real thing. And I think we have to acknowledge that. And at least for a while, I haven't been seeing people even joke about it or make fun of it because everyone inside or outside the Bitcoin ecosystem realizes how real of a thing it is. Before we dive into all of that, though, I did want to start with just getting to know you a little bit better. Again, since most of our listeners are deeper in the Ethereum space and you're working in the Bitcoin space, they might not be familiar with you. So I'd love to just get to know your background a little bit more. I know you mentioned, and I found this too when I was researching for this episode, that you got into crypto initially through your investment in Coinbase in the very, very, very early days. So you started out as an investor and then now you're obviously a builder operator at a project. But can you talk a little bit about your background as an investor and how that's led you to what you're doing today?
Yeah. So, even prior to joining Union Square Ventures, I was an entrepreneur. So I built 2 tech companies. I raised venture capital. I sold a business. I shut down a business. And then I joined the venture capital side. So in my heart of hearts, I'm always an operator. For me, it was a great way to learn about like how some of the biggest companies in Web 2 are growing. Because USV was an early investor in things like Twitter and Etsy and Stack Overflow and number of really large networks. And so being able to see like how were they able to operate? How were they able to scale? And I was there right at the time when like mobile apps were a new thing, like kind of this new technology paradigm of, wow, like what can you do on a computer versus what can you do on an app? And so seeing that, and then soon after, a big thesis that we had at the firm was around how are small companies going to compete with these large incumbents like Facebook and Google? And we're like, the only real way they can compete is if they do something that those companies can't do. And that idea was, well, with blockchains, you're basically saying instead of whoever aggregates the most data is going to win, it's whoever can open source the most data is going to win. So, we had this strong thesis of like, this is going to be an anti-Google and anti-Facebook, is like developing this idea of Bitcoin tech. Again, at the time, Bitcoin was the most prominent and the use of blockchain was kind of being proven out. So we had this thesis. We talked to a ton of companies. We met with Brian and Fred in like a really small conference room in San Francisco. We liked that they cared about compliance. We liked that they cared about, this open, self-sovereign value. And they were just such a high contrast to most of the other people we met in the space within that like time period who were very much like vigilante, like we're going to just take over everything and, a lot more kind of let's be like online pirates and stuff. So made that investment in Coinbase and we made a few other investments like IPFS, Blockstack, a few others that aren't around anymore. But those major ones, it really opened up my eyes into like, wow, this is a new platform for innovation. This is a new way for entrepreneurs to compete against incumbents and use a new paradigm we've never seen before. So I was like so excited about what they were doing. I stayed close with all the teams. I remember some of the things that I was like sitting on meetings and they're like, we've never hired anyone who's not an engineer. How do we even do that? Like, wow, this stuff's easy. Like what you guys are doing is hard. But through that journey, I continued to invest out of my own fund as well. I invested in some of this similar companies, about 25% in crypto. That fund is called Lattice Ventures. And kind of when it came time to raise additional capital in that fund, it was like, well, we could just be buying tokens. And this is like 2017 at this point. So it's like the ICO boom was in full swing. And if you weren't around in crypto at that time, it was basically like everyone had a white paper. They were trying to raise, millions, tens of millions of dollars. If you were a really large investor and you put in a larger check, you got like a bigger discount on like your token pricing. So if you were a smaller check, if you weren't the Andreessen or blockchain capital of the world, you were going to get a worse price just out of the gate. So it felt a little bit like gambling. It felt like just like, okay, we're going to buy these things. Like, we'll see. We don't know when everyone else is exiting because it wasn't like equity where it kind of gets tied up. So I was like, well, I think the real way to make an impact here is to actually join the movement and not just like kind of gamble on the movement. So I started advising some projects. I got very involved with the Blockstack project at the time. It's now called Stack, this belief that Bitcoin should be able to do more than just be a store of value. And yeah, I've spent close to 7-8 years working in that Bitcoin L2 of stacks, basically from white paper fundraising the whole way through. So I'll pause there because that was a lot, but happy to go deeper into what it was like at Stacks and sort of my role at Stacks.
Yeah, well, I have a few things are popping to mind. The first is, what was it about Stacks that drew you in? Because obviously as an investor, you're exposed to so many cool projects that are doing really innovative things, and you were attracted to you pick Stacks out of all of them. And then the other thing that's like just wild to me is how did you back then, I don't know, it was 7 years ago or even like a few years ago when you joined the team. Back then, how did you have conviction that building on Bitcoin or Bitcoin L2 was going to be possible? Because back then it wasn't. And I don't think people were really thinking that way about Bitcoin.
Yeah, I think it was, everything in hindsight. Even at that point, like investing in some of these tokens, we weren't sure if they were ever going to be liquid. Like there was not like a clear path that, tokens are going to launch. There's a way that you're going to be able to buy and sell them. It was just kind of like, okay, we think this is going to be the future. I have always loved the headless sort of nature of Bitcoin. There's not necessarily a leader. People can hold it. It doesn't actually really do a lot. In some ways, like I think that's like very elegant and very beautiful and should last a long time. You contrast that to something like Ethereum, which has been able to actually move much faster, I think, in terms of upgrades and changes because there is more leadership around it. Now that's a strength and a weakness. And I think we've seen this recently of just if people are criticizing one of the figureheads of the network. And so, I always really liked Bitcoin. I always thought like it should be able to do more, just like money can do more than just, making a payment. And Lightning was always something that I think is great. It's a way to do like small transactions, but thinking about like, how do you do larger things at scale? So even back to the Satoshi white papers, he talks about, there should be ways that you can use Bitcoin and program it. So I think this vision was actually painted much, from the beginning in Bitcoin. And it was just like a matter of time until we could get there. So that was one thing that I've always found very attractive about the Bitcoin space. And then something else just with the Stacks in particular, their approach was we want to go the regulated route. Like I helped them do the SEC qualified offering, which is very extensive. A lot of work with lawyers like saying, hey, we're going to help create regulatory rails that we're going to make it easier for projects to be able to launch in the US. Instead of just blocking over in the US and saying this technology is not for people who live here, saying like, hey, we're going to try and forge a path. Now, in retrospect, that didn't really help very much. I mean, we forged this path. There was millions of dollars spent on lawyers. We did an SEC qualified offering. There was, I think, one, maybe two other projects that even followed that path. But most projects just said, we're just, we're going to skip the US. We're not going to make it available unless you're an accredited investor. We're not going to actually give access to developers. Instead, we're just going to wait for like public markets that we can actually get access to those. So for me, that was very attractive because there's also just a ton of scams and bad, people that are well-intentioned and then they kind of make poor decisions or they intentionally make decisions like that. Or there's big things like at the time, if you're around, if you remember the DAO hack, it was sort of this very innovative company, but then they ended up there were some mistakes made and it ended up kind of changing the trajectory. So I really wanted to be with a project that like they very much valued, like we're going to do the right thing and we're going to try and make it accessible and easy for everyone to utilize it. So democratizing access is a huge theory of mine. And I think Ethereum has done a good job of that too, but it definitely aligns with the Bitcoin ethos too.
Yeah. In some ways, and maybe this is a sad thing, but in some ways that whole mentality that you just stated hasn't really changed too much today, right? Like today, when you're deciding to work with a project, it's still which ones are not scams, which ones are abiding by the laws or making an effort to do so, at least, like in a lot of ways that hasn't changed, sadly. But yeah, that totally makes sense to me. I'm curious then, moving more into the Bitcoin ecosystem, what's the state of the Bitcoin builder ecosystem today? Or maybe let's just go back to 2023 when building on Bitcoin first became possible. How did that become possible? Because I think a lot of people don't really know the ins and outs of that. And then take us to where we are today, a year or two later into that journey.
So in 2021, Bitcoin had a Taproot upgrade. So with this upgrade, it made it easier to put more data inside of a Bitcoin block. So that small change, I think it upped the data limit to like 4 megabytes. This made it feasible to do things like roll-ups, like roll-up transaction data. And all of that would happen on the L1. So you wouldn't need an L2. Because prior to that, it'd be like almost impossible to like store anything complicated in that. So with that opened up sort of the door to things like ordinals, which are basically like images inscribed in the Bitcoin blockchain. So again, we have NFTs in Ethereum, but this isn't like ERC20. It's not like another specific type of smart contract because there are no smart contracts in Bitcoin. You're basically just like inscribing it into the chain itself, into the transaction. So there was a lot of back and forth in the Bitcoin world of like, it's a good or bad thing. Now, it increased the number of transactions, which in some ways is great because it means that Bitcoin miners are getting additional fees, transaction fees when they're processing a block, but it also congested the chain. So if you wanted to send something, it made it more expensive to be able to send a Bitcoin transaction. So some people who want to calcify Bitcoin and keep it exactly as it was were upset, and some people who want more innovation viewed this positively. So since then, there's been some other upgrades. There's even some more speculative upgrades that are out there, things like OpCat, that they want to make it fully programmable. But that's still not necessarily possible. But with the Taproot upgrade, it made it more possible, though, to do things like L2s. So with Stacks, it views everything fine. All the finality goes on Bitcoin. So all the transactions process to Bitcoin. So they're run on the Stacks chain. And then because we have a very tight integration with the way that Stacks mining works to the Bitcoin chain, everything is ultimately settled on Bitcoin. So if you'd want to, attack the Stacks chain and try and change one of the past transactions, you would have to hack the Bitcoin chain to change the transaction hash from there.
What's the relationship between the Stacks chain and Bitcoin chain?
So Bitcoin has proof of work and miners use electricity to win a block. Now in Stack, we use Bitcoin. So miners have to bring Bitcoin to try and bid to win a block. And then when that's happening, that Bitcoin some of it gets distributed to stackers who are holding, similar to validators in a network. They're holding stacks to secure the chain. And then the miner and then some of that Bitcoin gets burned. And then the miners win stacks if they win a block. So we're kind of like, we're a layer on top, but you can kind of see we have like a replicated thing. Like in Bitcoin, you put in energy, you get out Bitcoin. In Stacks, you put in Bitcoin, you get out Stacks. So that is there. And then also one of the big upgrades for us was Nakamoto is like, we're able to write to the Bitcoin chain, which is like a very technical problem that has taken years to figure out how to do, to be able to put enough of that data inside of a Bitcoin transaction in the chain to make it useful. So that's kind of our close relationship there. It's why folks who like hold a lot of stacks, you can actually earn anywhere from 5 to 8% in Bitcoin yield by locking it in, which also makes it unique. So you're not earning stacks for locking stacks. You're actually earning Bitcoin, which I personally really like.
Yeah.
And so we have sort of that close there. Now, there are a few other players in the Bitcoin L2 space. There's things like Rootstock. There's even things like Babylon have come out. There's a number of players that are also thinking about how can you leverage the security of the Bitcoin chain, either through merge mining or some of these unique sort of mining setups like ours, and able to grow.
Gotcha. Okay. That makes the no smart contract thing is kind of blowing my mind just because I've always, as a non-technical person, I've just accepted smart contracts as a core part of what it is to build on blockchain. And so not having that is like, it's, taking me, I'm like rethinking all of that and like trying to figure it out in my head, which I don't know the inner workings of because I'm not technical, but.
Yeah. And some Bitcoiners are saying, well, we don't need smart contracts. That's not what Bitcoin is used for. That's not what it's meant for. My belief is like, well, creating L2s on top, it kind of serves the Bitcoin network, whether you just want to hold Bitcoin or not, because there's a plan, in the plan, the Bitcoin miners, they keep having the rewards. At a certain time, there will be no more block rewards left. So there will be no financial incentive to secure the Bitcoin blockchain anymore for miners. The only way that they are going to be incentivized is through transaction costs on the Bitcoin network. So the thesis was always like, well, by that time, there'll be enough transactions, people will be using it enough that miners will be able to mine profitably just from transactions. And so, now that we see the cost of Bitcoin going way up, people aren't just necessarily just sending it back and forth to each other because that transaction cost is massive. But instead, if you could kind of bundle more transactions and more value into single Bitcoin blocks, It just makes each block more valuable. You have more transaction fees that can go to the miners. It can help secure the network for a longer period of time.
Are the other L2s on top of Bitcoin, do they operate in pretty much the similar way that Stacks does?
There's a great article that goes through it. A number of them. So no other one uses proof of work. Ours is like there's proof of work and then there's proof of transfer. Proof of transfer is the mining with Bitcoin. There's some others, I think like Rootstock is more like merge mining, which means that you have parallel chains and you try and incentivize the Bitcoin miners to pick up your transactions on the parallel chain as well. Those usually have like, 40 to 60% of the security budget as main Bitcoin chain. But there's sometimes not a large enough incentive that Bitcoin miners could just ignore your transactions on like the parallel chain and they may not pick them up. So that's some of the criticism of something like merge mining, but it has worked really well for them. I was like checking the stats. I think Rootstock has like 42% of Bitcoin miners also participate in Rootstock like merge mining, which is great. So it's either like that or there's a lot of work being done for something called OpCat, which is way more complicated. So I will just encourage the audience to go look up OpCat. I would try and explain it to you simply, but I feel like my headspace is not there right now. But there's even like really large incentives around like roll-ups. And like I think Starkware has created $1 million fund to support research into OpCat. That way they could sell it to Ethereum and Bitcoin with Starknet as soon as OpCat was forked in. So basically being able to do things like roll-ups. So you're able to just, again, sort of collect a lot of transactions on a different parallel network and then being able to process them into a single Bitcoin transaction.
And then just to sort of finish studying the foundation, if we're comparing, for example, like the Bitcoin base layer with the Ethereum base layer, other than the fact that Bitcoin doesn't use smart contracts, they're proof of work, are there any other like key notable differences between the two?
The security sort of is like one of the hugest things I think about it. These are still experiments at the end of the day. Like even Ethereum, even Bitcoin, we don't know how proof of work will work long term. We don't know how like working with validators, like how these things could kind of be hacked or manipulated. I love that there's two parallel paths. We get to see these experiments happening in real time. But I do think what's interesting is that Bitcoin is the most like widely used, most widely accepted, largest market cap sort of chain out there. And that's why it makes it really interesting of like, there's not a lot being done. Like even really large holders of Bitcoin aren't necessarily participating in the network in any way besides just holding, which is kind of different than something you've seen in Ethereum. The belief in sort of this Bitcoin renaissance is like, what if people who are holding Bitcoin were more active participants in the chain in some way? Whether that's small things like they're opting into, maybe they think about mining in their play, or maybe they think about lending their Bitcoin off on chain instead of just having it be an idle asset that they're kind of, paying a lot of money to like store it in one place, but not necessarily improving the chain in any way.
Yeah. What has the response been from the Bitcoin community, like especially the OG people who were down with Bitcoin from the early days, with this transition into now building on top of Bitcoin, being able to do more than use it as a store of value, to be able to govern in the ecosystem and do all of these cool things? Has the response been mostly positive from these people getting involved? Or have you found that most of the people building on Bitcoin are newer entrants into the space who, don't already have this like embedded belief and idea of Bitcoin as just a store of value?
Yeah, I think having like existed in the Bitcoin space for a long time, there's a bunch of rhetoric around like shit coins, like anything that's not Bitcoin is shit coin. So, pardon my language. And, I think those folks still are around. I think there's still a lot of Bitcoin maxis, but I do think there's just what we've seen in the Bitcoin Unleashed events that are basically these large events that bring together all of the builders across Bitcoin. I think there's been a growing interest in like, how do we improve Bitcoin's longevity by adding more transactions and kind of thinking about the real risk that like if there are no more block rewards, what happens to miners, what happens to the security of the chain. I also think there's a number of Bitcoin purists that, they've come around to things like Bitcoin ETFs. Like in some ways, that's just like kind of against the ethos of Bitcoin. It's like a large financial institution is like holding keys on your behalf, not participating in network governance, not participating in the network, have no like plans to like support the open source technology. They just are like kind of like extracting value and like keeping it. But it actually plays really well to like the long thesis that like Bitcoin will be globally accepted asset and it will be used in all these different asset classes. So, I was at a conference earlier this year and there are a number of top folks who are, hardcore long-term Bitcoin people, and they see the value in, wow, Bitcoin can be used for more things. And like lending and borrowing gets very attractive if you're sitting on billions of dollars worth of value and you can actually leverage that in some way, or you can like utilize that to improve things. So I think there's a growing interest. And like I said, it kind of goes back to some of these upgrades that have just happened over the past few years that change people's mind of like, oh, wait, maybe we can use Bitcoin for stuff. We don't have to just like bridge it through maybe like unsecure bridges to other chains.
I'm curious what types of apps you've seen being built on Bitcoin so far. And if there's a certain category that seems to be really strong, or if there's like for example, when I think of Solana compared to Ethereum, I think like Solana has a lot of consumer apps. They're really good at UX. You know, these are like the top things that come to mind. I wonder if Bitcoin has a general, like a specific category, or if it's still just kind of experimenting generally across the board.
Yeah, I mean, I think the longest standing one is Lightning. Can't talk about Bitcoin without Lightning. I think it's great for small payments. You know, it's like you're sending money back and forth between a few people. It's not like you're going to be able to like pay your rent with like Lightning. There's like, it's too large of a thing. So they've been doing a great job forever. So yay, Lightning. But for other things, I think it is still like borrowing and lending. There's a number of new things that have recently popped up at Stacks. We did our upgrade and SBTC launched, which is like a synthetic Bitcoin where you lock your Bitcoin on the Bitcoin chain. So you use the Stacks network, but you're able to keep it in place. And then you get a synthetic asset that you can then use in different things like DeFi, like Zest protocol offers yield. Granite is coming out to offer sort of borrowing and lending. I think that's, it's fairly basic to begin with, but this is what we've seen be very popular in other DeFi networks as well. It's just like, great, I have an asset that has value. People are willing to pay me money to like borrow and use that asset, and then I can keep my asset secure. And then I think the other thing is just like ordinals, runes. We've seen a lot of popularity in people who want to inscribe things that they feel confident aren't going to go away, and they would be accessible for very long periods of time. Like as long as there's someone mining the Bitcoin blockchain, like you have your inscription and it's intact. So, kind of similar to what we saw with the NFTs, but I think that difference of like, what's the longevity of this chain kind of entices people to build things on Bitcoin that they wouldn't build on other chains.
Working in Web3 for the past 5 years, I've seen firsthand how crucial reliable data is for everything we build. But getting accurate, transparent data on-chain has always been a challenge. That's why I'm excited about Teller. They're revolutionizing how we handle reference prices in crypto by taking a completely decentralized approach to data creation and validation. Teller is not just another oracle. They built an entire architecture that leverages collective intelligence to ensure the data you're getting is accurate and censorship resistant. If you're building something that needs high quality data you can trust, you need to check out Teller today at teller.io. That's TELLOR.io, or on X at WeAreTeller. Yeah. What do you see as the long-term outcome or impact of, especially I think with borrowing and lending on the more financial side of things? I think there's so much that can be done still. And that's probably an area where I would say Bitcoin has huge potential, like even over Ethereum, because I feel like within the Ethereum community, there's been this such like an emphasis on the ethos and the tech, which is all great. But I think like through all of that, somehow the financialization of everything has become almost a taboo topic, or not even taboo, but like even worse than that, like something that's like frowned upon. And I think there's been a lot of missed opportunities there because of that sort of like mentality shift within the community. And I think that's maybe where Bitcoin has a huge advantage and can really make a huge impact. Do you kind of agree with that very outsider assessment of the situation? And what do you see as the bigger, longer term impact that Bitcoin can have on, payments like globally?
The first step is there's, hundreds of millions of dollars worth of value that's currently stored in Bitcoin that's not being utilized anywhere. And I think that creates a real big opportunity to think about what can be done there. Now, both for better and worse, because if people are able to just super leverage this asset that's very volatile, it can create a lot of almost like fresh capital into an ecosystem that wasn't accessible before. And so that kind of leads to both positive and negative. But I do think that there's some other thoughts of like, why isn't there like a Bitcoin denominated stablecoin? And I think that gets interesting just thinking about how, these cryptocurrencies can be used as global currencies and global digital currencies like across the world. And right now things are still pegged into like US dollar, which feels very like nationalistic versus it being more global. So I'd love to see that. I think that's something that's very like in the works, and it's a large topic of discussion, just the importance that stablecoins play in global financial markets as well as like crypto markets. And I'd love to see like a Bitcoin backed stablecoin. But that requires making sure that there's like a lot of access and like trusted folks helping provide the liquidity for that and things there. So I think there's a lot of moving parts we'll see. And then I think just on the more global stage of like a lot of institutions that were speaking at CFC, they kind of spoke about wanting to hold large amounts of Bitcoin on their balance sheet as sort of a hedge, as sort of an asset that they could use and they think they can utilize in the future. And I think that will get really interesting when you have more sophisticated holders of Bitcoin, what can be, what tools and access that they want to have to make it easier. Potentially it makes it much easier to even have like better Bitcoin wallets. Like most folks probably listening to this, besides something like Exchange, probably don't think a lot about what Bitcoin wallet they're using. Like if you wanted to go mint an ordinal, like what wallet would you use? You can't use MetaMask. You're not using Phantom. So just thinking about some of the tooling that doesn't really exist in the same way that does in Ethereum. But if there's potentially ways to make these better onboarding tools for everyone to be able to utilize, and hopefully it can, have lots of coins in it. It doesn't have to be limited to Bitcoin, but because it's not EVM compatible, you kind of get excluded from a lot of things that are very easy to use on things like Solana and Ethereum.
Yeah. Now that you say that, I actually can't come up with one Bitcoin wallet. Like I just use Coinbase for that. But what are some of the biggest Bitcoin wallets that people use?
So in our area, there's Xverse and Leather Wallet are two of the biggest ones. People use Ledger as well. But yeah, it's like there isn't a ubiquitous like consumer wallet that you're necessarily swapping and trading and stuff from, which is like if people don't have wallets, it's really hard for them to keep their own keys. And like that's kind of the ethos of Bitcoin. So it's like, how can we make this easier, guys? Like how can we make this people have confidence in it, in their security, but also be able to utilize it for different things.
Do you see that people in the Bitcoin ecosystem have that same sort of like goal that a lot of people on Ethereum talk about with wanting to onboard the masses, onboarding the next billion? Is that also a goal of it, like in the Bitcoin community, or do you see less of a focus on that and therefore less of a focus on the onboarding piece?
Yeah, it's a good question. I mean, I think having hung out with a lot of Bitcoin maxis, it's like there is like a very, in some ways, like a very sovereign view of the world. Like, well, I believe in self-sovereignty. I believe in my taking control myself. And like, I want to do that. And anyone who wants to take control has to get on Bitcoin. But if they don't want control, then like, fine, maybe that's not for them. So it's like a little bit of I think, join us if you want to, but if not, then like, we're not going to try and hardcore recruit you.
Yeah.
Strangely enough. So yeah, I don't know if that's there, but I think with an incoming wave, again, like kind of the last couple of years, we've seen Stacks as one of the fastest growing developer networks. And I think it's because people who are either way OG and have always wanted to build on Bitcoin are joining, or folks who are new to the space and identify with some of the ethos of Bitcoin or just see the potential they're building for the first time in the Bitcoin network and Bitcoin L2s like Stacks, and trying to see what's possible. Because it also feels like there's a lot of green space to build things that don't exist versus if you go to like sort of an Ethereum or Solana, there's like a ton of competition. There's, a lot of established players that it may be hard to innovate because they have so much market share already.
Yeah. Other than wallets and onboarding tools and a Bitcoin stablecoin, like we talked about, what are some other apps that you would really like to see built out on Bitcoin, like ASAP?
Yeah, I mean, I think I just like look at the Ethereum stack and I'm like, great, why don't we have that? Why doesn't this exist here? But can I easily lend? Like, why aren't there better bridges? Like, when are we going to get interoperability? I think that's like a huge one because I think Ethereum would benefit. I think Solana would benefit. I think all of the chains would benefit if there's better interoperability between, people are able to get into SBTC. You lock your Bitcoin here, you trust where it is, and then you can utilize it in any of these pieces of the ecosystem. And right now that's just very hard, or you have to do it in a way that's like probably not up to the security level people want.
Is that something that Bitcoiners want, that interoperability between ecosystems, or are they like, Bitcoin is the best. We believe in sovereignty and nobody else believes in that as much as we do. And so we want to stay in our lane.
I don't know. I like I said, I'm not a maxi, but I think maxis would be like, well, I'm only going to hold Bitcoin. That's fine. But I think people who are building in the Bitcoin space are like, yeah, of course, we want to be able to tap into all of these other great networks. You also get you get security scale if you are using like a DeFi protocol that has like a lot of liquidity versus trying to like bootstrap the liquidity network, or it has more vulnerability to hacks and attacks. So I do think that there's a lot of benefit to having, trusted systems and being able to take your assets into those versus having to kind of wait for that infrastructure to be built out over time. So I'm excited about it personally, to see more options there.
What do you think are the biggest gaps, or what do you think needs the most attention right now in the Bitcoin developer ecosystem?
Part of it, I think, is just this awareness of like, hey, you can build stuff here. I think that narrative is still stuck in people's minds. Like, that's not where people go to build. But I do think that there's a huge green space to do that. And I think, at the Stacks Network, we've been working for years to be able to enable this and kind of bring something like SBTC out there. Because I think most people associate like, okay, if I'm going to do a Bitcoin transaction, it's going to be extremely high fee. It's going to be extremely slow. Versus if you use the Stacks Network now, it's an L2, you're able to do it, in seconds or cents. So it just makes it a lot easier to be able to experiment and grow. And that was not the case a year ago. So, it's kind of like very new still, but that's why I think it's like a really great place to build. We also use Clarity as like the programming language. So if you are familiar with Solidity, it's different. You're going to have to just learn some of the small changes there.
Gotcha. Yeah, I can see that being a big roadblock too, is just like developers not knowing how to use the language. Have you found that is it like, are there tools out there for developers to be able to learn Clarity quickly and easily? Or is that kind of like just up to the person themselves to figure it out?
Yes, there's tons of Clarity bootcamp. There's tons of directories. I mean, even with the introduction of AI, it's like all of this stuff is documented. You can probably get a lot of help very quickly through that. We also have partnerships with like Easy A. They provide a great application where you can kind of learn very quickly, get up to speed on new networks. So that should not be a blocker. If you're worried about that, just check out stacks.org. We have a ton of great resources.
Perfect. So if, envisioning how the ecosystem is going to develop over the next year, if we were to have this conversation again in exactly a year, where do you think, where would you predict that the ecosystem would be at 1 year from today?
Ooh, yeah, that's a great question. I mean, I think people have been making like wild price predictions on Bitcoin at 200,000, 250,000, like only up from here. I think that if that's the case, I think we're going to see a ton of inflows of more developers building on Bitcoin. So I would love to see, Bitcoin builders being like number 2 or number 3 in terms of number of developers. I think we're closer to like the top 20. So I'd love to see more innovation there. I would also love to see just like more ubiquitous access to these L2s and Bitcoin network where everyone has their wallet, and whether that's like MetaMask ad support or people are downloading an additional wallet. I think it's just going to be a lot easier to think about Bitcoin as something you use, not just something you store.
Yeah, I love the shift in narrative, and I hope to see the same as well. I think it's only going to be beneficial to everyone and, across Ethereum, Solana, like any ecosystem, if we can also build more cool things on Bitcoin too, because like you said, there's more value financially locked in that ecosystem than anywhere else. So it would be cool to be able to do something and make some impact with it. I did also want to, with the remaining time we have, ask you about something else you're working on, which is autonomous. So I'd love to hear you talk about what is autonomous, what's the sort of inspiration behind the things that you do there.
Yeah. Thanks. So autonomous it's been around for a few years. I just joined in the winter, and it's a great team based in the Cayman Islands. They basically do Web3 Foundation and DAO support. So any projects who are looking to launch a token, we help think about the strategy of going to market, launching, and then supporting the financial and operations after the point. So for me, being an advisor to this group and then working with the team is such a revelation, because having built a foundation and launched a token and dealt with market makers and exchanges and all of the numerous steps that it takes to really bring a protocol to market, I'm so happy that there's a team that now does this and does it with like very, high fidelity and like detail and security in mind. So at Autonomous, they've worked with over 70 projects. We're looking for companies that want to do a really great launch, and that takes multiple steps. Even with the changes or potential changes with US regulation, most companies are still probably going to launch their token offshore because of tax reasons and need that ongoing support of how you set it up to be compliant and you do the proper reporting and you're able to do your financials and your taxes and your, sending of payments and sending of transactions. And this company, Autonomous, helps make it just much easier for the teams that want to build really great projects and focus on the community and growth. They can do that. And then they can work with Autonomous as a partner to help, manage a bunch of like treasury management, finance, ops, and launch.
What have you seen as some of the biggest mistakes protocols or organizations make with regards to these types of things, legal, treasury, things like that, compliance, or just like any common questions that everybody seems to have that, from your experience consulting with them and advising?
The first one is for anyone who hasn't like launched a project yet, happy to just like chat with you, come check out Autonomous, because I think most people don't know all of the extent of like steps that it takes. Like, I think we were like marking it out. I think there's like 26 steps you kind of like need to take. So it's like, okay, what is the timing? When do you talk to market makers? Which market makers? What law firms do you work with? What do you have to take care of on sort of your valuation side and like filing the proper paperwork in order to be able to launch and not have like huge tax implications for, the company or all of your employees. So there's quite an extensive sort of like path to get to launch. Sometimes we talk to projects like, great, we're going to like launch in 2 weeks. We're ready. And it's like, oh, have you done your 83B? Do you know which employees are moving over? Have you incorporated the company? Do you know how you're going to mint? Do you know what the distribution of those tokens are going to look like when you mint? Like, who's holding? What are their lockups? Have you like modeled that out? And a lot of times people are like, no, I'm like a single person in charge of like launching and I've never done it before. And like, what do I do? So I think that's one problem. I also think that right now we're in a really interesting time because some projects are saying, great, I'm just going to go to pump.fun. I'm going to like launch and we're going to go from there. And that can be great, but it can also be very problematic in terms of how people think about holding your token long term or how much people are willing to invest if they think it's going to be around for a while versus something that the goal is to get in and get out. And then we've had a number of people ask questions of like, well, why can't I just launch in the US now that, there's been this administration change? And I think there still is not regulatory clarity of what that looks like. There's still very large tax implications of that. So just being thoughtful of like, okay, if you want to build something for the long term, how do you set it up for success? And how do you make sure that you're taking the necessary steps to be compliant and build a really solid project that's going to be around for a long time?
Yeah, it almost reminds me, obviously in your case to a much bigger extent, but when people reach out to me and they're like, hey, I'm thinking about starting a podcast, like, can I just like ask you a few questions? And a lot of people, I think, assume that you can just, start a podcast. It just takes an hour a week to record the episode. And then magically it appears edited, published all over the internet. All the clips are made and everything. And you get a ton of listeners. And I'm like, no, like that's like that 1 hour of recording per week, like times 10 is the work that it takes to put into that. So obviously, like in your case, much, much bigger extent of this example, but it just reminded me of that, or people just assume that from the outside, it's like, oh, that looks so easy. Like I can just launch a project. I can just launch a token. And you're like, no, on the back end, there's so much that goes on that you're not considering.
Yeah. And one of the other things that we help and sort of advise on is around grants programs. That's like another one. It's like we're mature projects. They've already launched, but they're like, great, we're just going to like spin up an application. We're just going to put it on a website and boom, we're going to have all these great grantees come in. And having launched a grants program and evolved it over years of time and kind of talked to the best grants programs in our industry, it is a very complicated thing to just making the decision. How is money getting allocated? What are you even looking for? What size grants should you have? What is the follow-up? How are you reporting? And it's amazing how many millions of dollars have gone through grants programs, and there haven't been the necessary like design features in them. So like that money just like goes out the door and there's nothing ever seen of it again. And that's not because people are even have malintent. They just don't know the scope of some of the things that they're submitting for. And so that's another big one. If you are thinking about grants or grants programs, please let's just chat for like 60 minutes. We'll help get some of those like ideas in place of just how you think about designing a successful grants program and something that's sustainable and that you can do over the long period of time. Because often too, it's like 1 to 3 people running a $500 million grants program, which is like absurd.
Yeah. No, I've seen that so many times. And yeah, I would like personally love to chat more about that, as well as somebody who's run smaller grants programs before and realize how time consuming and challenging of a process it is. It is wild to me that I think a lot of people expect these grants programs to be run by one person or like 1 to 3 people, like you said. And they're like, how hard could it possibly be? We don't need to like, we will only approve this grants program if there's like very minimal, like 5 to 10% of that going to operational costs. And it's like, there's so many operational costs though. Like who can afford to effectively run a grants program on such little money? Right. So yeah, that's a whole other episode.
Will do it. Okay. Well, even just coordinating the community,
totally,
even if
you
have an army of volunteers, like still need to be directed and, need to know what the guidelines are and how to take action on those. And then often too, it's like the most successful grants programs. It actually has less to do with the upfront application. It's also the ongoing need for support. Like these projects are like, okay, great. I launched something. Like, how do I get it out there? How do I market it? How do I get set up for success over the long term? And so they need a lot of support over the long term. So you kind of need to bake that into your cost of your grants program. It's not just like give money away. It's like, how are you going to have the ongoing support for these teams? So
the cat herding is like a full-time job in and of itself, right? And then it's like throughout the process afterwards, you want to be able to report on the impact that your grant program made. And there's following up with projects over the next 3 to 6 or even 3 to 6 months or even longer period of time to see what impact they've made and gathering that data and reporting on it. There's so much that goes into it that I think just isn't really recognized. I think people just don't think about it. And so, it's not properly funded or then like incentivized. But again, that's a whole other episode. Like we could literally record a whole episode. Yeah, next podcast, we'll just talk about that. Finally, I have a couple of questions from the community that I wanted to make sure we have a chance to throw at you. And the first one is from Irina Marinescu, who's a past guest on Rehash and also the person who nominated you for the podcast. She wanted to know, what are your most contrarian or interesting learnings from your prior life as an investor? Hot takes.
One of the things that always sticks with me as a VC, but not as an entrepreneur, is that like everything repeats, like everything actually kind of looks very similar. So sometimes it's like, if you don't know what's going to happen in the future, you should just like look at the past. Kind of like what we saw with, one of the VCs would always talk about, like the rise of AOL, and AOL would like hit this massive saturation of household internet. And then someone came in and was just like, we're just going to offer it for free. You don't need to pay for hours. You don't need to pay. And how that undercut AOL, and they never really pivoted out of like, you're right, we should change our business model. Instead, they just kind of got cannibalized out of existence. Like, I think there's still probably a small group of people that use AOL, but kind of seeing that in the same way that they were saying, okay, well, Google and Facebook are so massive. And then blockchains will say, hey, all that data that you think is very precious, we're going to just give it away for free. So it's always kind of looking for those patterns to kind of repeat themselves. And I think even in crypto, we're kind of reaching maturity in some ways. So it's like, what's going to be meaningful to people, or how can we look back and see what happened to try and predict what will happen next with some of these new protocols? So I don't know what the answer is yet, but always, if you're unsure, just look back.
Great advice. And then the other question is from Matthew on Twitter. They said, have there been any misconceptions about stacks you've had to clarify?
Oh, of course.
I'm sure many, right?
At sort of the front line, at the foundation, there's constantly, or early Bitcoin maxi hate of anything that's saying it's tied to Bitcoin and, it's different. It has its own coin. Even just like Bitcoin L2s, I think it's like, people are like, okay, like I kind of know what that is, but I don't. But, Stacks helps make Bitcoin faster. The Nakamoto upgrade, the transaction fees are very low and the speed is very high, which if you used Stacks 2 years ago, the speed was about the same that it is today, which is much better. So it's definitely something I just encourage people to check out. There's great NFTs if you just want to kind of dabble and take a look. And then also the launch of SBTC. It's just kind of rolled out almost in like a beta, like it's still testing phase. So there's been 1,000 SBTC minted. So that's 1,000 Bitcoin that was put in. There's another cap opening up this month. So there's probably, another 1,000, 2,000 BTC that will enter. You can earn 5% yield on your Bitcoin if you utilize SBTC at this point. So, and it's funny to say 1,000 BTC with the market cap of $100,000. It's like an incredible amount of money is sort of flowing in. So even though it feels like, oh, it's nascent, it's small, it's just growing, and like the demand is incredible. We've seen this in Stacks, we've seen this in things like Babylon. So definitely just take a look. And we believe it's going to be the year of Bitcoin, but I think builders are the ones who are going to really define like what Bitcoin can do by the end of this year, which will be very exciting.
Yeah, that's super exciting. I feel like you've given so many actionable things that people can do, whether you're a developer or a user, to go check out and get more involved in the Bitcoin ecosystem. So I'm personally curious. I'm going to figure out how to get a Bitcoin wallet and maybe snag an NFT of sorts. I feel like it's such a fun...
I'll send you an NFT if you want.
Oh my God, yes, please.
Yeah.
Yeah. No, I feel like this is like re-onboarding to crypto from, like taking me back 5 years or whatever and re-onboarding onto crypto all over again, which is kind of fun and kind of new and exciting. So I'm down to try it for sure. And I really appreciate you taking the time today. Where can people find you to just keep up with what you're doing or to ask for help with, with setting up, launching a token or setting up a grants program or anything like that? And then throw out all the links that people need to know to Stacks or to Autonomous or to DM or whatever.
Fantastic. Yes. Well, if you're interested in Stacks, check out stacks.org. You can also check out @Stacks on Twitter. For Autonomous, it's autonomousprojects.co. We're also Autonomous on Twitter. And then I'm on Twitter. I always call Twitter, not X, some OG.
Same.
It's Brittany, but it's BR_TTANY. Feel free to message me. I will send you the right direction for any of those as well. Thank you so much for having me on here. And thank you guys for the votes. And I'm excited to hopefully help onboard more of you guys to Stacks and Bitcoin. Happy to send some Stacks over to get people started.
Amazing. Thanks so much, Brittany. Also, sick Twitter handles, power moves with just getting the Stacks, the Autonomous, the Brittany. That's power moves. That's how you know you're OG. But thanks so much for taking the time. Thank you, everybody, for tuning in. And we'll be back again next week with another episode of Rehash.
Great. Thanks.
Thank you for tuning in to this episode of Rehash. Rehash is hosted and produced by me, Diana Chen, and supported by our community of NFT holders who curate our guest lineup each season. To get involved, head over to our website at rehashweb3.xyz and collect this episode as an NFT. Anyone who collects an episode becomes part of the Rehash community and will be able to nominate guests for future seasons. Also, be sure to follow us on Twitter, Instagram, and TikTok at rehashweb3 or on Warpcast and Lens at Rehash, and join our community on Telegram at t.me/rehashweb3 to hash it out with fellow listeners. If you enjoyed this episode, please rate, review, and subscribe on Apple Podcasts, Spotify, or wherever you get your podcasts. Thanks again for listening, and we'll see you again next time.